At GenWealth, one of our standards is that we have a unified purpose. Now there's an internal aspect to that, and then there's an external aspect. All of us internally on the GenWealth team are working toward one purpose, but that purpose is to work with you, our clients, in whatever need you may have. John F. Kennedy said, efforts and courage are not enough without purpose and direction. I believe that one of the reasons many people have trouble getting up and going to work on a Monday morning is that they don't have purpose and direction in what they're doing. But we do, every day, every week, and that's your purpose. Whatever it is that you want to do in retirement, we're here to help you meet that purpose, which means you and the GenWealth team all together have a unified purpose.
a little bit more about, are you on track for a successful retirement? And part of a successful retirement, as we've talked about in this show, is more than just having the portfolio you need, just more than having the asset level you need, but about the protections that you may need to put in place to get ready for what's going to come your way. And that happens in pre-retirement years as you're still building assets. And it can also be there, that risk that you may need to protect against is there as well in a different way once you reach retirement and you are entering into that post-work life. And then there's also the Medicare decisions that everyone, as they walk up on retirement, is going to have to deal with. And in fact, it's the most common age that people choose to retire, age 65.
Yeah.
And we think that that's probably why, because that's when they're eligible to receive some health insurance from the government. And that's the biggest fear, I think, that one of the biggest fears that we work with, Janet, on folks daily getting ready for retirement is how I'm going to replace the healthcare coverage that I have.
It absolutely is, Scott. I mean, if somebody's retiring prior to 65, that is one of the first things that we talk about is solving for the challenge of how to pay for their healthcare to bridge that gap to Medicare. So, Tony, let's talk about, first of all, what is Medicare? And then secondly, who's eligible for it? Like, when can they get it?
Before we do that,
can
we have Tony tell us a little bit about himself?
Yeah, I'm sorry, go ahead.
You talked about his
in the first segment,
a
but
little bit,
yeah, go ahead.
Welcome to you, by the way.
Yeah.
I just crossed right across your nose and pitched it to Janet.
And then I threw you a question. Ready, set, go.
But tell us a little bit. I mean, welcome aboard to the radio show. You've been with us for, how long you been here now?
Right at a month now.
Right at 1 month. Tell us a little bit about your background and how you wound up being in the field you're in.
Yeah, so I was in the restaurant business out of college for about 20 years and just came to a point where I wanted to try something different. Got into the insurance business, mainly focused on P&C, home and auto, life insurance, and now real excited to make the transition to GenWealth and focus on life insurance, long-term care, and then also diving into Medicare, which that's a whole nother monster to try to tackle.
It is.
Yes.
It is.
But really looking forward to the opportunity. I think it's something our clients need. They want the help with it, and it's not something that, if you take it, read it as it is, it's not easy to understand. And I think hopefully we can simplify that for them and, find plans that fit their needs.
Tony, let's talk about some experiences that you've already had. I mean, we're not quite to open enrollment, but there are some people because of age and other situations that we've already been able to talk to in the time that you've been here, and people who didn't think that they were going to be able to save any money. And we've seen a pretty big change for some of those. And obviously, and let me do the disclaimer here, not everybody's going to have the same experience. Our goal, if you were to meet with GenWealth, as far as Medicare is concerned, our goal is to get you the coverage that you need in the least expensive way possible. And sometimes that means a lower premium, but sometimes it's a little bit higher premium, but an overall lower cost, like on drug care, for example. So just give a couple of examples of like some experiences you've had already with people in this.
Definitely. So Medicare, typically you think 65,
right?
But if you have been on disability for 2 years, then you can get, some access to that through Medicaid and some of the Advantage plans. And so we did have a client come in and had been on the disability, and we helped them transition, from a Medicare Advantage plan, which does fit certain people and is their best option, but we transitioned to a supplement, worked through his medications, and basically set up so he did save money, several $100s a month, but he also now can forecast his expenses for the year.
Yeah.
Which is a big deal because he's, if you're on a fixed income or, regardless of your income level,
right,
it's nice to know what's coming your direction. So that worked out real smooth. And just yesterday, I actually met with my parents. My dad had mentioned his drugs, and he had something that he wanted to just double check to see if he could, is this the best thing for me? We worked through that with him and going to save him, $50, $60 a month.
Yeah.
And he actually didn't go with the cheapest plan, but we went with a plan that evened his cost out across the year so that he can say, okay, January I need this, in April I need this by quarter. And then my mom actually wasn't even concerned about hers because she doesn't have a lot to do, but we just, of course, went ahead and took a look at it and, dropped her cost to, I think, like $15 a month from, about $50 a month. So,
yeah. Yeah. I think the point, Scott, is really there are so many options, and even as Tony and I have gone through this process with Medicare, because there's all the certification and everything that you have to do, it can feel, I'm certain, to a 65-year-old going into this, like this is not their career choice. It's just they've got to survive life, so they need some type of health insurance in place, and so they walk through all this information. I'm certain it can be very overwhelming, and it's hard to know whether you've made the right choice.
Mm-hmm.
And so our goal, I think this really melds into our overall goal of being very, educationally based anyway.
Yep.
And we're wanting to educate you and help you use those dollars as wisely as possible.
I see it a lot like the Social Security issue. I mean, obviously,
Yeah.
that's the same kind of deal. So many choices, so many options, and you don't really get a lot of help from the source you kind of maybe go in expecting it from, right? Social Security is not going to really help you make a decision.
Right.
They're going to give you all the information you need, but that can be overwhelming when it comes to making a decision. And I think Medicare is the same way. And when you think about the service component from our end, this is helping you in the ready-to-retire process. We talk about the GenWealth ready-to-retire process. This just makes it even more encompassing. And I think there are some things that we can talk about on this segment that people need to be made aware of on this broadcast that because they may be there, right? And that's the annual election period.
Mm-hmm.
You made reference to that when you were going to talk about it. I want to kind of go there because you said it's Medicare season.
Yes, yes.
So let's talk about what that means and what decisions are on board there, Tony, for people who are closing in on age 65.
Yes, so October 1st started our first look period, so that's when all the carriers release their rates for 2022. Gives us a couple weeks to, kind of dive into the numbers, and then starting October 15th through December 7th, if you want to make any changes to your Medicare Advantage to another Medicare Advantage, or if you want to go from a supplement to a Advantage plan, and then also that's the time of year you want to review your drug plan, because that's something we need to do every year and every season, and that's our key time to make changes to those.
And one of the things that we've looked at that we want people to understand that we are aware of, when we've called people, they've gone, "Hey, I'm not leaving what I'm on," because they know that they can't come back to it in certain situations. So again, we're looking at this. I know they don't use the term fiduciary in the Medicare world, but we're gonna use that here. We're looking at it as though we are in your shoes. What would be in your best interest? And so we're not going to take you from original Medicare to Medicare Advantage knowing that you can't come back and go that route without having to go through underwriting, which nobody past 65 wants to do.
Right.
So we're aware of those rules, and we're not going to put you in a situation like that. But I think a lot of people, Tony, don't know about, like with Part D for the drug care, even if you have the same medicines, you may still need a different plan than you needed a year ago. You want to talk a little bit about why on that?
Yeah, so Part D, you're not locked into any one company every year, but they do change their formularies, which is basically how they're going to price out and cover different drugs. So you really, our focus on, will be to review your Part D every year, even if you're happy with, previous year. We just want to make sure that we're, keeping it in line with what is best for you every year.
So let's use this as a little educational time as well. When you say Part D, I think about Medicare parts going all the way through the alphabet just about now, right? So let's talk about what the parts are. What is Part A? Then what is Part B? And then you mentioned the Medicare Advantage. I'm not sure everybody would just automatically know what that is.
Yeah.
So Part A is going to be hospital. It's going to be more of the inpatient coverage. If you break a leg and you're in the hospital for a week, then that's going to be Part A coverage.
I would say we've even seen some illustrations that with the letter A, they'll draw like a hospital building. Mm-hmm. A usually is associated with a building. So it's like hospital stays, skilled nursing facilities, hospice care. It does include some home health care. Mm-hmm. So think about the letter A just making the shape of a building, and that's going to cover those areas.
All right, and Part B then?
Part B is going to be medical service, and that's going to be outpatient, so doctor's appointments, specialists. So if you go to, just your PCP and they send you to a cardiologist, those are going to be Part B coverages. And then some of the preventative service too, like a wellness checkup, that type of deal, it falls into that. And then Part C, or Medicare Advantage, is basically choosing to go the private route, and it encompasses A and B. It's Part C or Medicare Advantage plan. It relates more to similar how you have insurance at work throughout your life. It's got, you're not open to choose whoever you want to. You have to kind of follow their plan and use their providers and hospitals and services.
So Part A, too, it's important to point out that's the one that you paid into all your life, so you actually don't pay for that when you enroll.
Right.
But Part B does come with a monthly premium and is optional. So there's where a lot of choice comes into play, and the amount of that monthly premium is greatly determinant on the amount of income that you're going to be making in retirement, right?
It is, and that's another reason that we think it's beneficial for you to do this at GenWealth, between your financial advisor and Tony, to work together on this, because your financial advisors have access to a program that can take your tax returns and run that through the program and spit out what your Medicare premiums are going to be a couple of years down the road, because a lot of people don't realize that their Medicare premiums are actually on a 2-year income look back. And especially when you get over age 70, when we start at 70 and a half, when we start doing qualified charitable distributions and helping people with their charitable giving, that can positively impact how much you pay in Medicare premiums. So to work with advisors who are familiar with the impact on your Medicare premiums, and if Tony's sitting there looking at Medicare premiums and maybe you don't even have an advisor, then he's going to go, hey, if you talk to these guys about this, then we can change it.
If you need some help making some of those decisions, you can call toll-free 866-653-PLAN. That's 866-653-7526. We'll take a break and be right back.
A game warden noticed how a particular fellow named Sam consistently caught more fish than anyone else. The successful fisherman invited the game warden to come along with him and observe. So the next morning, the two fellows met at the dock and took off in Sam's boat. When they got to the middle of the lake, Sam stopped the boat and the warden sat back to see how it was done. Sam's approach was really simple. He took out a stick of dynamite, lit it, and threw it in the air. The explosion rocked the lake with such a force that dead fish immediately began to surface. Sam took out a net and started scooping them up. Well, you can imagine the reaction of the game warden. When he recovered from the shock of it all, he began yelling at Sam. He said, "Hey, buddy, you can't do this. I'll put you in jail. You'll be paying every fine there is in the book." The game warden was just incredulous. Sam, meantime, just simply set down his net, took out another stick of dynamite. He lit it, tossed it this time in the lap of the game warden with these words, "Are you going to sit there all day complaining, or are you going to fish?" For some of us, the same question could be asked about our retirement. This is John Shrewsbury with GenWealth Financial Advisors. Whether it's trying to find the best investment or just worrying about the stock market, a lot of folks seem frozen with retirement indecision, and that very well could lead to an explosion of your own, an explosion of your dreams for a comfortable future. Plan now for your time on the lake or wherever your dreams take you.
Want more straight talk about retirement, investments, and your money? Listen to our podcast on iTunes, Stitcher, or wherever you listen to podcasts. Now back to the Get Ready for the Future show.
And welcome back. Scott Inman, Janet Walker, and Tony Contorno, our new insurance specialist, new team member, joining us to talk about insurance on today's Get Ready for the Future show. And we talked about Medicare in the last segment, and we really just had time to give a broad overview of some of the decisions that you are faced with as you enroll for the first time, and then as the election period begins and you have the opportunity to make changes. And all of those decisions can be, you have help available here at GenWealth Financial Advisors. You can sit down with an advisor and with Tony to walk through those decisions and how they fit into your overall retirement income plan and your overall retirement plan. And if you'd like to sit down and begin that process, to go through the GenWealth Ready to Retire process, the first step is to either call us at 866-653-PLAN. That's 866-653-7526. Or you can give us an email. Send us an email, info@getreadyforthefuture.com. And Anna Olive is our client introductory specialist. She'll give you a phone call, talk to you about your needs, and set you up with the right people in one of our offices. And that first appointment is always complimentary. So it's really just a discussion. That first time out is what do you need help with, and we can tell you about our services and how we can provide that help. So I know Medicare, even in a 12-minute and 40-second segment on a radio show, we can't really go over all the specifics of Medicare, but it just suffice it to say that we're very happy, Tony, to have you on board and have someone looking at that, because as a financial advisor, you are dealing with so many other things, and that is obviously something that gets asked about often in a client meeting room, and now we have a way to really address those needs and build it into the overall plan. So I think that's exciting. So the other remaining time we have on the show, as we get a little more than halfway through it, we're going to talk about the other insurance components to your financial plan, and we'll start with the post or at and post retirement insurance need that's out there. We're going to talk about life insurance, but I think we see life insurance, Janet, as a bridge, as a way to make sure you reach your destination of retirement. Oftentimes, once you get there, there's probably not, if you have followed the plan and the plan is in place, there's probably not a lot of need for a death benefit in the form of a life insurance policy, unless you just want it. Many of our clients do just want to pass that on to the next generation, and that's great. The need, though, the risk that is really more evident, and I call it the elephant in the room when I talk about it with my clients, is the risk of long-term care. We just spent 12 minutes and 40 seconds talking about Medicare. Guess what Medicare does not cover?
Long-term care. Yeah, absolutely. And it really is a tremendous risk. Basically, your odds are 50-50 that you're going to need it. So if you look at a husband and wife and you go, well, that's half of you two, you know. Yeah. So one of you probably is and one of you probably isn't. Now, statistically, that's how it works out. It might be that both people in that couple need it, and it might be that only one does. We don't know. What we do know is it is a tremendous risk because, as Scott talked about earlier in the show, let's say that a couple needs to have $6,000 a month in income for their cash flow needs every month. So they need to have that, and then along comes a medical need to the point that one of them needs to have care. And when we talk about long-term care, most people think about in a facility, whether it's in a facility or at home, there is cost there. And sometimes, frankly, it is more costly to stay at home than it is to be in a facility, depending on the level of care that you need. But regardless, in this scenario, let's play this out. The couple needed $6,000, and now an individual needs $6,000. Well, if the plan was good for the couple, we now need basically $12,000 to maintain the standard of living for the person who doesn't need care, and then to get care for the other person. That'll blow up anybody's financial plan to double the need of income at some point along the line. And, for some people, they don't ever need that level of care. They need a lesser amount. They need fewer things done for them at home, not maybe as high of a professional level. But the point is, even if it's $3,000, that's 50% more income than we had planned for. And Tony, that's the reason that we see a need for long-term care. Let's talk about how some people might qualify. Like, what are some of the activities of daily living, the ways that they qualify to actually need to use the policy?
Yeah, to get to qualify for long-term care, so you're going to need to not be able to perform 2 of the 6 activities of daily living, which is bathing, transferring, continence, dressing, toileting, and eating. So just 2 of those. It's not that's not a lot of problems to go wrong. And long-term care is definitely an underused insurance product that it's a lot easier to plan to pay for that policy than to plan to pay for the costs that come with it.
I heard another professional in the industry speaking recently about an experience she had with her mom. They live in two different states, pretty far away, and she had been home for just a brief time to visit with her mom and her stepdad, and she realized when she was there, like, oh my gosh, when I talk to them on the phone, everything sounds fine, but when I'm there, like, mom is exhausted taking care of him. Like, she's completely worn out, and it's wearing down her health to take care of him. But that's just, they started out, and it was a little bit that she needed to do for stepdad, and then it was a little bit more, and then it was a little bit more, and now it's pretty much everything. And it's not something, they just have conversations with the daughter. They don't say, it's exhausting me to do this. That never comes up. But when she was there and observed it, it really made an impact. And so she started going through the policy that her parents had and realized, like, right now, he qualifies for somebody to come in home and do all of these things that mom is doing for him. And so it will prolong her life and her health, and the policy would pay for it. So it's already there.
There is no question that it is a risk that everyone will face, whether you need long-term care coverage or long-term care income. There are 4 ways to pay for it. You can self-insure if your asset level is high enough to support that. And we just talked about that. We documented it twice in this show, is if you're building a plan for income, it better be high enough to support 2 people going into that need, or like a nursing home or even at home need. The other option is Medicaid. That's the other end of the spectrum. If you have no assets or assets of $2,000 or less, you're going to be able to receive Medicaid insurance to provide for that coverage. But the middle silo there for everybody else, if you don't have enough assets to self-insure, or you do have assets but so you don't qualify for Medicaid, is the option of leveraging an insurance company to provide that care. Let's talk real briefly, because I know that we've got to get on to life insurance as well, but the differences between the 2 types of long-term care insurance really that are out there, the traditional coverage, and then what has become increasingly more popular, a life insurance policy with a chronic illness rider.
So we will talk about both of those. I definitely, based on personal experience, have a preference between them. But we will talk about them and determine what is the best fit for you. And I think that's what you're going to find at GenWealth, regardless of what your situation is. We're always wanting to be sure that it fits for you. My mom has a traditional long-term care policy because at the time that she got coverage, really that was the only option that was out there. But a lot of people didn't get those types of policies because frankly they looked a little expensive when people started going to get the coverage. And so the situation is, with a traditional long-term care policy, if mom needs care, then it's a reimbursement type of situation. So my brother and I will go through and pay the bills, and then we'll get a reimbursement after we document that with the insurance company. It's also, if she passes away from, let's say, a heart attack and doesn't ever need the care, she's just gone, then there's not going to be a payout from that traditional long-term care insurance policy, because it is for care either in the home or in a facility, but it's not going to be if there's an immediate passing. And so the industry began to realize that people were not getting enough coverage. They weren't covering the need of long-term care. And so, Tony, they began to put together this melded product, if you will, where really it's a life insurance policy, but it has a rider on it to cover extended care needs. And so, like I was talking about in the reimbursement situation that my mom has, these types of policies will just pay out. Once you can't do 2 of the activities of daily living, they just start sending a check. You can use it to pay somebody to mow your yard if you need to. It doesn't have to be for care. And also, if you pass away from a heart attack, since it is a life insurance policy, it's going to pay out then. And, Scott, we talked about earlier that we don't really believe you need life insurance your entire life.
Right.
This is different because it's making sure that this policy is going to pay. It's not for the purpose of replacing your income, but it is, hey, if I'm going to pay in a premium, I'd like for me or my heirs to get something out of this.
You're purchasing coverage in a traditional policy, right, that may or may not ever be needed. But in this scenario, I like to talk about it in terms of you're buying a pool of money. On day one, you're paying a monthly premium that's going to purchase a pool of money, and that pool of money is going to come to you one way or the other.
Right, and that's definitely probably a better feeling for trying to get people to get the coverage. They don't feel like it's a use it or lose it scenario. One way or another, that money will come back and be useful for their family.
So we have just a couple of minutes left in this segment, so it's pretty apparent that we're going to need to probably get into life insurance just a little bit and then move into the final segment and kind of finish up. But the other component of insurance, we talked about life insurance bridging that gap. But Tony, when you look at that need, that is really more in the pre-retirement years, because we talked about in the first segment with John and Janet that it's not really life insurance, it's survivor insurance. So as you're in your work life and you're building your retirement assets, and you may have a mortgage, more than likely, you may have debt, what happens if you don't come home one day? And that's really where our approach to the life insurance need.
Yeah, I mean, because you don't plan to not be there, but it ultimately happens. So I think building in the life insurance into your plan protects your family. It allows the plan to continue and not have to be completely wrecked and start over, because that can be a large gap that's missing. And if it does happen and it is needed, it also provides peace of mind for the family. They can focus on the grieving process, not be worried about, okay, I just lost my spouse, or and now I also have to worry about how am I going to feed my family next month, or keep things on track.
Scott, earlier you talked about making it to the destination of retirement, but I think life insurance is also about allowing you to still enjoy the journey along the path to that destination. You've lost a loved one, and that is a difficult process, but how do you, to the greatest extent possible, still enjoy the journey? And not being financially strapped is a key factor there.
Are you on track for the retirement that you dream about? Well, there is a way to find out. Get a bird's eye view of it by visiting 15minuteretirement.com. That's the number 1 and 5, and then spell out minuteretirement.com to find out. Or you can just text the word checkup to this number, 501-381-5228. 501-381-5228. Back in a moment. There's always been power in standing up for what you believe in, challenging the status quo, and never accepting the ordinary. What about the rest of your life? Will you settle? Or will your retirement be more? More fun, more family than finances, more than just investments. Connect with us at GenWealth and harness the power of more.
At GenWealth, one of our standards is we believe in balance, and it's really a twofold standard. For our team, we believe that you've got to work and you've got to do things the right way, but you also have to have some time off, and you can't do your job if your job is all you do. For our clients, we believe in balance because their investment portfolios need to take as much risk as they need to achieve their goals, but not so much risk that they lose everything that they've got. Balance is incredibly important in both our team and for our clients.
You ain't heard nothing yet. Buckle up, because we're back with the Get Ready for the Future show.
Are you in, as in insured? That is the topic of today's Get Ready for the Future show. Our final segment, Scott Inman along with Janet Walker and Tony Contorno, our new insurance specialist, new team member at GenWealth. As we talked about Medicare earlier in today's broadcast, the need for long-term care insurance and how to determine how you're going to address that risk in retirement, because that's typically when that's going to happen. But now we're in the pre-retirement years as we talk about the need for life insurance, and this is part of our holistic planning approach at GenWealth too. And one of the obvious things there is if you don't come home, if you're the primary salary earner in your home, if you don't come home, there's the immediate responsibility of paying expenses and debt and mortgage. There's also the future contributions to your 401k or your retirement plan that don't happen. So you do need to think about if you aren't here to experience your retirement, how is your spouse, how is she going to manage through those retirement years later as well? So all of that kind of encompasses into evaluating your life insurance need, and it comes in the form of a death benefit. And we think about that being the way to plan for this. So when we look at types of life insurance that are out there, there's obviously term and there's whole life. And people can probably come to a pretty immediate recognition or awareness that I probably have a gap here. If I don't come home tomorrow, I need some life insurance. But determining what type of coverage, Tony, what are some thoughts for folks on going about figuring that out?
Well, of course, whole life, it's going to be there forever. As long as you keep paying the premiums, you'll have the coverage. But typically that can restrict, not everybody has an unlimited budget when it comes to getting life insurance. So we're typically going to look at term insurance, and we're, as part of your whole plan, we're not trying to make that amount of coverage cover your whole life. We want to get it to replace the income and bridge us to retirement. So going with term is going to allow us to purchase the full amount that we actually need, which, your advisor will get with you and we can figure out what that amount is. It's going to be different for everybody. There's not a one-size-fits-all amount that's, a good, and most of the calculators are kind of rough, so we like to dig a little bit in depth on that.
I'll give you an example on that. Let's say that your spouse, if you don't come home, that your spouse needs to have $50,000 a year. Well, how many people have we seen that they're like, oh yeah, I got plenty of life insurance. I got $250,000 at work. And that's like the end of the conversation. Well, if we just took it at $50,000 a year and no other calculations on it, that's 5 years worth. And you're probably having this conversation more than 5 years out from retirement, okay? So really, that's even in a spin down, that's not going to work. What we would really recommend is that you think about, okay, $50,000, if you were to come in to an advisor, so you meet with an insurance agent early on, but then if something actually happens, you come into an advisor with that check and go, now what do I do? Well, if you need $50,000 a year, we need you to have $1 million to be able to generate that $50,000 a year. And so that $1 million in life insurance coverage is a way larger number than $250,000. But as Tony was saying, if you go the term route, which is all I have on myself, it's all most of our team members have, probably all. I don't know that I can say that 100%, but it's probably accurate to say that that's all anybody in our team has on themselves is term insurance, because it is the least expensive way to get the coverage that you need. And so if you come in with $1 million, then we can generate that $50,000 a year on an ongoing basis. There's not a point at which we go, okay, you're going to have to replace it another way.
Let's talk about the value a little bit of the term insurance, because I think there is a misnomer when you look at the different types of insurances that are out there, how much it is going to cost. And this also points to the need to get it earlier, right? Because the premiums are going to be much less the younger you are. It stands to reason. And that term, again, as Tony's already mentioned, the whole life covers you for your whole life. So the insurance is undoubtedly going to be more expensive because it has to cover you for your whole life. It does typically build up a cash value, so you're paying a part of that premium for the insurance, and you're part of that premium going into something that's going to earn interest. But if we're really just seeking the death benefit and making sure that the life insurance death benefit is adequate to cover you, we want it to be as large as possible and cost the least amount. So if you remove the cash value and then you're only being covered for a certain length of time, then obviously it's going to be cheaper, and it can be pretty inexpensive, especially if you get it early.
Yeah, and that's the key. The money pays the premium, but your health determines the premium. So you want to, the earlier you get it, the less likely you are to already have health issues. And then if we wait until, it's too late, then either you can't get it or you can't afford to actually get the premium and get the coverage that you do need.
I think you brought up a good point too earlier about sitting down with an advisor on the front end rather than after something happens and here is my life insurance, because that can help you determine the amount that you need as a part of your overall plan.
Right, and not every dollar that you make has to be replaced. So if you're making, let's say, $50,000, if that's your salary, well, some of that's going to taxes. Some of that is probably, hopefully, going to your 401k, maybe a Roth IRA as well. Some of it's going to your food and your clothing. So not every penny that you make has to be replaced, but you do need to look at what does the rest of the family, what does your household need? And we haven't really talked about a timeline. We've used the word term, which is indicative of a timeline, but we want to look at, if you have children, we want to look at getting that youngest child to about age 25. The math doesn't always work out exactly right because term policies come in like 20 years, 25, 30. If, your kid is going to be 25 in 23 years, there's not a 23-year, policy. So we may push that a little bit. But basically, the point of that 25-year-old timeline is that if they're going to college, they're hopefully done by then, and they've got a little bit of time after college to get on their own. If they're not going to college, they're also probably independent by that point. You want to give them a little cushion after they're done with formal education to be able to be financially independent of you before your life insurance ends.
Our focus today has been on insurance, but insurance decisions should never be made in a vacuum. So our question as we get ready to wrap up here today is, what's the plan? The overall plan is what needs to be built. One of the most essential parts of all of this is having a financial plan built on paper, on purpose, that is more than just investments. We talk about it all the time that people go to their financial advisor for investment advice, but they should be going for an overall financial plan. And that's what we do here at GenWealth. It is on paper, on purpose, in a 3-ring binder that covers things like insurance decisions, investment decisions, but most importantly, retirement income too. Building a monthly retirement income stream for you, and it's obviously dependent upon what's in that plan is dependent upon what area of life you're in, where you are on your journey, and we have Janet a service and a planning software to address someone regardless of where they are.
Yeah, let's even circle back to insurance on this. I've known people in their 30s this year. We've known them personally who have been in life-threatening situations, and it immediately goes through your mind, oh my gosh, do they have the proper amount of life insurance in place right now? They're young. Do they have that in place? And so if you're at that stage, that's what we're looking at. If you're 65 or older, we're looking at all the Medicare type things that we've been talking about today with Tony. So that's just on the insurance side, but there are equivalent conversations on the financial side. And financially, it's a little bit more difficult to give general ideas of what we would talk about because we have some people in their 30s who have several $100,000 accumulated already, and we have some people in their 30s who walk in and go, I've heard of a Roth, what is it? And that's okay. Wherever you are, we want to meet you along that journey and help you walk the rest of that path to and through retirement. So really, regardless of your age, regardless of your stage in life financially, not just with age, but it's all about getting somebody to walk alongside you on that journey.
If you're about 5 to 10 years out from retirement, it's our Ready to Retire process that is designed specifically for you. It covers 7 key areas: investment strategy, Social Security maximization, creating guaranteed income to meet your basic needs. It protects against inflation and provides for your lifestyle income as part of the plan. Also, we address the long-term care needs as part of that Ready to Retire process, as we've highlighted in today's show. We talk about reducing taxes and have a plan for that during retirement, and it's all documented in a written plan, as we mentioned already, on paper, on purpose. If you'd like to get started, no matter where you are along your journey towards financial independence, you can call us toll-free at 866-653-PLAN. That's 866-653-7526. And you heard the bell there in the background. That means it's time for our final thoughts as we wrap up today's show. And Tony, we're going to let you go first.
Sure. I'll just quick reminder that Medicare open enrollment is next week, the 15th through December 7th. And that's your big chance to adjust your plan and make sure that it's what you need for next year.
Very good. Janet?
So I'll focus on Medicare and on life insurance. I would say one of our phrases that we really like is don't just hope it works out, plan on it. So regardless of what type of insurance or investing, whatever it is that is most on your mind, you're thinking about it because you probably need to spend some time planning on it as well. And so just give us a call. We'd be happy to sit down with you and walk through that process along your journey to retirement.
All right, my final thought is our option for a free 15-minute retirement, a look at where you are. Are you on track for the retirement you dream of? We have this resource available, and it is not the all-encompassing planning process that we want you to go through, but it's a good start to kind of give you an idea of where you are right now on your journey toward retirement. You can get this free 15-Minute Retirement by going to 15minuteretirement.com. Use the number 15 and then spell out minuteretirement.com. Or if you've got a cell phone, you can just text the word checkup to 501-381-5228. Again, it's 501-381-5228. Text the word checkup for your free 15-minute retirement checkup. Well, I hope you've enjoyed today's show in our new studio. We are debuting it today on our live stream. And if you're listening on radio and have never watched us, again, we are on live 11:30 a.m. every Wednesday morning. And see the new studio here from West Little Rock, and we'll talk to you again next week.
The GenWealth Financial Team is available to you 24/7 at info@getreadyforthefuture.com or call our offices at 866-653-PLAN. That's 866-653-7526. You should personally consult a financial advisor before making any investment, and no strategy can assure success. GenWealth Financial Advisors is an Arkansas-registered investment advisor with securities offered through LPL Financial, member FINRA SIPC.